Ever wonder why some businesses thrive while others struggle to stay afloat? It often comes down to small business owners understanding one critical factor: revenue. Today, we're diving deep into this crucial topic with Pathway Business Advisor, Keyunta Dawson, and Bob Lancaster, Director of Business Advisory Services, who know exactly what small business owners need to look out for when it comes to tracking and managing their revenue.
So, operating margin, what is it?
Well, operating margin is basically the operating income divided by sales. That's the percentage of sales that's left after you pay your cost of sales and you pay all your operating expenses. Mm-hmm. And operating expenses are such things as payroll, insurance, taxes, rent, all your expenses you incur in the day-to-day operation of a business. So what's left over is called operating income, which is nothing more than sales or total income minus operating expenses.
So in the last video, you kind of talk about the top of the sheet. So we're moving down.
We move down.
And that number is getting a little smaller,
It's getting smaller. You start out with your gross profit, and then you start deducting from that all your operating expenses. And when you're through deducting your operating expenses, you have operating income.
So why is that important for a small business?
Well, because an operating income is what's left over to pay all your debt, pay all your yourself, mm-hmm. and hopefully accumulate some reserves.
So what's the best way to monitor this metric?
There is no absolute target for operating income or operating margin. Operating margin is the expense, percentage of operating income to sales. There's no magic. Certain businesses have higher operating margins than others, particularly capital-intensive industries have that because they have to spend a lot of money on fixed assets, whereas restaurants have typically lower operating margins. So it's just really knowing what is required of that business to cover all your other types of expenditures you have. They're not operating expenses, and also knowing what the industry targets should be. I mean, you should pattern yourself after the successful companies as well as
benchmarks.
You're going to do some benchmarking.
Yeah.
And I would say one other thing is you would hope that the operating margin over time would increase, particularly if they're below where they need to be, or at worst they would stay flat. Mm-hmm. So you do need to track it over time.
So if a person wants to create more margin or higher margins, you think working with an advisor would help them? Yeah.
They're going to be looking at expense levels, typically.
Yeah.
You look first, as we talked about in a previous session, you look at pricing. Are you pricing your products at the level, high enough levels? Mm-hmm. And then once you get through that level, you'll start looking at every expense input in a company. It could be payroll, or I mean, are you overstaffed, whatever. Can you purchase your certain of your subscriptions better? I mean, can you reduce utility costs?
Talk to vendors.
Can you negotiate better pricing? So you would look at each expense level to see whether or not there are actions you can take to reduce those expenses. So to increase the bottom line, you've got to either increase the top line or reduce all the expenses in between.
Yeah. So go back to the top of that list.
Top of the list is start and come back down. And the underwriter is going to be looking at that, at those indications of how a company is managing the expenses over time.
Yeah.
If you're looking to dive deeper into managing your business finances, or are preparing your business to receive capital, we've got more resources waiting for you online. Just click the link in the description below to explore topics like revenue management and other crucial metrics that financial institutions consider when you're seeking capital to grow your business. Our team of business advisors offers free support to Tennessee entrepreneurs in various aspects of growing their small businesses and taking on new opportunities. As the largest non-depository community development financial institution in the state, we provide lending solutions and educational services to help grow and preserve small businesses. So join us online and plan your next steps with Pathway.